Well, markets are looking to the Fed's December meeting for a reason to rally after October's better than feared inflation print gave some investors hope that coming rate hikes could ease. Joining now to discuss the outlook for the Fed is Sanders Morris Harris Chairman George Ball. And George, we did get some comments this morning from Boston Fed President Susan Collins, who said, look, in order to tame inflation, we don't necessarily have to hit the labor market. In light of the latest economic data that we've gotten on inflation, do you agree?
I worked at Prudential when Paul Volcker was on the board there. And I remember Paul saying to me one night over cocktails that the way that you killed inflation was like killing a snake. First, you had to kill the snake. Then you had to cut the head off the snake and show it to everybody in the village so that they knew that the snake was dead. Translating that into today, and not a late night cocktail conversation, what the Fed has done and is going to do in its next meeting will effectively tame inflation. The Fed, will have done their job, but they're going to have to keep rates at a very high level for quite a protracted period of time in order for the ignoramuses of the world like me to believe and to understand that inflation is dead. Ergo, there isn't a great deal more market risk in Fed rate hikes. There is, however, going to be a much longer period of time when rates are still high compared to what they were a year or two ago than people are anticipating currently. That's not all bad, but the rate vista is apt to be one or two more increases. Everybody expects that. And then after that, a placid Fed, and we aren't used to that at this point in time.
George, though, sort of kind of to reiterate the point, so much of this conversation around Fed rate hikes have been in tandem with the strength of the labor market, in that the labor market would, in fact, have to suffer. We've seen the unemployment rate tick up just slightly. But, are we likely to see the kind of pain that maybe people had anticipated? Or does the latest inflation data show that the taming of the inflation doesn't necessarily have to come at the expense of that?
The optimal rate of unemployment for many years, and even today, is thought to be around 5%. Today, it's 3.8%, very near a historic low. I don't want people to be out of work. I don't want their families to suffer. However, there is a natural churn in employment, and if the cost of taming inflation, bringing it back to 2% or so, means that the unemployment rate goes up to 5%, that's probably in the national good. There's a little bit of a few must die so that many will live philosophy in that. But I think that inflation robs everybody, particularly the poorer, the less affluent amongst us. And therefore, if inflation increases to 5%, that is not a catastrophe, either for the economy or for the markets.
George, really quickly before we let you go, I was looking through some of the notes you sent through today, and the one thing that stood out to me is your call on Bitcoin, where you say Bitcoin is a buy on strength. Obviously, we have seen how far it has fallen. There's concerns around the system as a whole. I mean, can you kind of talk me through your thesis here and why you think that if Bitcoin rallies above that $20,000 level, it's a time to get in?
The fundamental reasons for thinking that Bitcoin has a valued place as a means of exchange still exist. It can't be corrupted by central governments, number one. And number two, it has speculative allure, particularly in times when people are concerned about corporate earnings. So the reason for Bitcoin existing and having value is as sound today as it was 2 months or 6 months ago. A very wise elderly investor that I knew once, a very famous investor, said, don't try to buy things at the bottom. You don't know when that is. Buy them when they start to go up. Once and if faith in Bitcoin and the other cryptocurrencies is restored, then and you see strength in Bitcoin, and I'm arbitrarily saying if it goes from 16,000 odd to above 20,000, then's the time to buy it. Don't try to time the bottom. If it gets strong again, yes, participate with a very limited amount of your portfolio.
George Ball, Sanders Morris Harris, Chairman, good to have you on this morning. Appreciate your time.
Enjoyed it. Thank you.